We are live. This is Pitchdeckasia. My name is Graham Brown, joined in the studio by Asheesh Chanda. Asheesh, welcome.
Thank you. I'm happy to be here. Good morning, everyone.
Yeah, good morning to you. Great that you're coming here. That we're also going to talk about the world of Kristal.ai, your journey to get there, what problem that you're solving and the why, all of that. Bit of background to yourself first. Originally from India.
Yeah.
Where are you from in India?
So I come from the northern part of India, the capital, New Delhi.
Mm-hmm.
And so I've studied there, first a techie, then an MBA, and then moved to Mumbai for a couple of years in the financial industry, then Hong Kong for about 5, and Singapore has been my home for the last 8 years, since 2011.
Okay. It gives us a little bit of a clue into where you worked. I mean, obviously, Hong Kong, Singapore, financial industry specifically.
Right.
Where were you working? What kind of things were you involved in?
So I spent my time at a couple of banks, whether it's Citi, BNP Paribas, JP Morgan, even ran a hedge fund for 2 years before started the journey with Kristal.ai.
Okay. So you started in 2016.
That's correct.
So 3 years in.
Yes.
Fantastic. You started the business as a sole founder or the co-founder? Can you tell us a little bit about the early stages of the business so we know who's involved?
So towards the end of 2015, we identified a particular problem, and I reached out to one of my very closest friends who was in the tech industry. We used to go to the same university for 4 years together, from 96 to 2000. And when he got excited about the whole idea, we said that this is great. We are a winning combo. Let's launch it together.
Right. So there's two co-founders. So I'm getting an idea. He's the tech guy. You are the sales guy.
So both of us are techies at heart. But
you're
yes,
a techie.
but yes, now I am the financial guy or the sales guy.
You're the front face of
Yes.
the organization, right? All right. Well, we'll talk about Kristal.ai, what it is and what the problem that you are solving. Maybe we can first start by identifying the market itself. Right. So you have a slide on your pitch deck here. If I can jump into the pitch deck.
Sure.
And take a look. And bear in mind that some people are listening, so they might not see everything that we have access to here. So I'm going to go to slide 8 here. Let me just find this slide 8, the market slide itself. So I think this kind of gives us an understanding of what market we're dealing with, and that will sort of then lead us into the problem with that market and then your solution for that. So help us understand what's the market, what's the total addressable market that we're dealing with?
Sure. So the market that we are addressing is what we like to call as the mass affluent. So these are people who have had a small amount of exposure to investing, but they're not being given access to certain products or services that they desire to have access to. Because the top of the pyramid services the ultra high net worth or very high net worth people. So people who are in the mid segment are basically left underserved. So it's a mass affluent people who want to get the first couple of investments done, have a consistent return, and build a portfolio for themselves. And so that's the problem that we are addressing.
So help me understand. In the pyramid here, you sort of split down the financial net worth of the complete market. Within that, you are targeting that mid-tier?
That's correct.
So let me understand again, these are not the ultra-high net worth individuals or people who don't have liquid cash, but the people who have money but aren't being serviced or don't know how to invest? Or
either of them. So mostly what happens is that the top of the pyramid, the ultra-high or the high net worth, they are being serviced by the traditional players, the big private banks.
Yeah.
And there is the RoboAdvisory segment that's entering into the first-time investors or millennials as such. Now, the whole middle segment lands up being ignored because they neither fit in at the bottom of the pyramid nor at the top. And the kind of demands or the kind of products that they desire are a little bit more complex than just, let's say, simple ETFs. So you need to understand what their needs are and provide a service in a digital manner that can scale up to millions of people. And so it's people, let's say, anywhere between $10,000 to, let's say, even $1 million or more that they're looking to put to use to build, let's say, a retirement portfolio or something for a home and things like that. Yeah.
Right. So these are people that wouldn't traditionally buy into like over-the-counter style ETFs, or they maybe would do because that's their only option, but they may have more complex needs, complex products. You're talking about like a retirement portfolio.
So I wouldn't say complex. I think the requirements are more something more involved, that they desire to get access to other things which the rich only have access to. Now, when you have, let's say, only $1,000, you probably do not desire to have access to something which a 10 million guy is buying. But if you have, let's say, 50,000, 100,000, you do want to get a peek into what are these guys doing and can I get a share of that?
Right. What are these guys doing that the guys at the bottom end aren't interested in, but the guys in the middle are interested in? And also, wouldn't that be the role of a traditional financial advisor to give those kind of...
That exactly would be. But the problem in today's market is that the traditional advisors, the business models, the structure is such that they're not able to provide advice or devote time to people in this segment just because the size of investment is small. So that segment is not really a profitable one for them, and it's unlikely to be. So the only way to solve that problem is when you have digital solutions like, let's say, AI, which can understand the needs of this segment and reach out to them in a scalable manner. So which is why these latest technologies, when you put them to use in the right way, you can pretty much expand the market. Now, the kind of stuff that these people want is, let's say, beyond ETFs, you want to get access to certain bonds, certain baskets of equities. You may want to participate in P2P loans, in other startups. So people want to get a share of every new thing that comes. But usually the new things are only shown to the ultra-rich. And that's the problem we're trying to solve.
Interesting. Okay. Let's go into the problem itself and sort of quantify that a little bit. You've got a couple of good slides here. So we'll bounce back a little bit. Go to slide 4. You have here identification of the problem. So you're talking about the gaps in the market. I mean, you've done a good job of this already, talking about, I suppose the portfolio managers, they're accessible only by a small group of people direct,
that's correct.
Right?
Yeah.
People otherwise are buying to funds, right, which are sort of done en masse.
See, over there also, the portfolio managers that we give access to are the budding managers. So they may be funds, but they are small funds. So they're the ones who are trying to get access to capital by putting in that extra effort. See, whereas if you look at the multi-billion funds, they already are being flocked with capital from the big insurance companies, institutions, sovereign funds, and so on. So someone needs to come and tell them that yes, we are there to enable you. And I don't know if you recognize the movie clip that I've added over there.
Yeah.
So there's one from The Big Short, and the other is Wolf of Wall Street. Yeah. So in Big Short, that's a scene where they say that you are $1.47 billion lesser than what is needed to even talk to you.
Right, and that's exactly, yeah. I mean, it's not even a conversation you can start with these guys, is it? And on the other side with the Wolf of Wall Street, what's the conversation there for investors?
So the conversation there is, so that's a scene where DiCaprio is just showing that can you sell this pen, which probably doesn't work.
So it's product
to
sales,
someone. So it's like basically you just sell this thing. This thing is
Yeah.
probably shit, but you still sell it.
Yeah.
And so that's a very product sale, product push that happens in industry.
Yeah.
And we're saying that why should we be doing that? You need to understand what the user wants and give them access to stuff which that they want and they desire, rather than being just a pen pusher.
I can verify that because I started my career as a financial advisor. And as much as you think it's all about advising the client, very much you're driven by product sales and commissions.
Correct. Yeah.
So, and that's the mass market for most people. They think they're getting sort of high net worth style services, but you've just got a guy who's like selling, at the time, quite poorly constructed products as well.
Correct.
So, all right. So we talked a little bit about the problem. You have another slide here as well, which sort of goes into the problem a little bit deeper. If we can jump there, slide 6. Sorry, I've gone into the market. I'm just going to jump forward a little bit here.
Sure.
Yeah, so what I want to do now is look at the market you're targeting, just give it some numbers itself, and maybe the size of this market, and then we'll have a look at the solution. So here we have the client segments, and you've done a good job of sort of like laying that out. So you've got the retail market, which is the entry market.
Correct.
Okay, and then at the top you've got the ultra high net worth. But you define your market how? I mean, you've got these high net worth individuals, private, premier.
So that's an internal segmentation that we do just to make sure that our efforts are aligned in the right way from a sales and marketing process. But you look at the middle 3 segments, what we call as premier, private, high net worth. It's actually overall as a segment you can call it the mass affluent.
Mm-hmm.
And that mass affluent is people who've probably been through with their first $20,000 of investment. They've probably invested in ETFs or have had some exposure to it. And now they're looking for, what's the other things that we can do. If I have my next $10,000 to save, should I be buying the same ETFs, or is there something else that I can do? And the answer could be either. It doesn't matter. But the thing is that you need to start saving, investing early in your life. And that's one of the objectives, at least we have, by keeping the retail segment as free. We're calling it the Freedom Account now.
Okay, so they're the onboarding of the future, maybe students as well? As kind of people. Yeah,
anyone.
Okay. All right, good. So let's take this forward. Let's talk about the solution to this. You've mentioned that solutions are out there in the market already. You've talked about RoboAdvisory.
Yeah.
There's plenty of solutions out there. How do you sort of sit compared to robo-advisors and then all the way up to the very bespoke portfolio managers? Where do you sit in this market?
So let's say if you look at the bottom of the pyramid as per the slide, it's the robo-advisors, which are predominantly ETF-only solutions. The top is the private banks. So you'll have the Swiss names, the other names, who will have the ultra-high net worth, and that's where the focus is. And the whole middle segment, whose desires or demands are actually more of what the upper segment wants, but they are given access only of the free versions or the robo versions. So they have something different desires that needs to be, let's say, fulfilled. So we look at there are robo-advisors, then there are what I call as the digital private bank or digital wealth players, and then there is the traditional private banks.
Where do you sit? So you're in the DPB,
so we are in
digital private
so
bank.
we just use the word bank in quotes, but typically digital private wealth platforms or digital private bank is what we call it in 3 words to ourselves. Yeah.
A digital private bank. So you have all the services of a private bank, but in the digital world.
Correct.
Can that not be done by a robo-advisor?
So for example, RoboAdvisor is a subset of our solution. So that's our starter product. Now, for a RoboAdvisor to become a digital private bank, they need to have extensive product expertise, understanding of how these clients behave, what their preferences are, and also understand the technology, the algorithms behind it. So it's a RoboAdvisor actually is a very simple, straightforward solution, which is the same cookie cutter for pretty much a large segment of clients, because they are, let's say, profiled similarly, that it's a first timers or people with, let's say, 10,000. But the moment you want to be a little bit more sophisticated, then you need to differentiate one user from the other. So your profile, Graham, will be different from Bharat's profile, and let's say the portfolio that suits you or the products that you like will be different from, let's say, what Bharat does. So that gauging that is the crux of the algorithms.
How do you do that? So without giving away the secrets, but what do you do that, what are you bringing to the table that isn't being done elsewhere? And how also, that let's talk how that leads into the AI discussion as well. So the first part, what are you doing differently to everybody else?
So there are two key differences, I would say. So one is that our whole company has been constructed like a technology firm. So when we started in 2016, January, it was a tech firm that we started. It's only about a year later that we ventured into financial advisory or fund management. So the whole building blocks of the firm are very tech-driven, and data is very key to us on how our marketing works, sales works, user engagement works, client servicing, advisory, everything is driven to that. So what we want to do is, so just to give a glimpse of what AI does, AI looks at your user behavior. So let's say if you have the app, what are the products you're watching on the app? What is based on your likes, dislikes, if you can somehow gauge that, how much time you spent on which particular, let's say, link or page. That gives us some insight into what you may like and what's more relevant for you. And the pattern of usage can also tell us how what kind of downsides is okay for a particular product, which is suitable for you or not. So suitability, appropriateness, preferences, objectives can be gauged through user behavior, rather than me just asking you, hey, if you were to lose 50%, is that okay? And you'll be like, oh, no, it's not okay. So
Right. But that's okay. I mean, the sort of the fact find on the traditional financial services side is, left wanting, isn't it? It's not particularly useful for giving insights, and when they do collect the insights, it then doesn't get actioned on an ongoing basis. What are you doing, for example, that banks are not doing? Why can't a bank, for example, just get a clever piece of AI or marketing? Like you say, if we're just sort of collecting data about what you're looking at, if you're looking at certain products, then I know you have an interest in this and I can ask you certain specific questions. But surely a bank can do that, right? What's sort of holding them back from sort of replicating what you're doing?
No, so I'm not saying the banks are not doing that. So their focus area is definitely different. They're on the top of the segment where the requirement is anyway more human touch. So there are two questions there. One is that are they even interested in the middle segment or not? I don't know the answer. Maybe it's best to ask the banks. And the second is, if they are, then are they is their ecosystem such data driven, which enables the user to use it in a way that they are happy to tell them more about the profile directly or indirectly, knowing that if I do this thing, it's going to help me in getting a portfolio of my choice. If the user also doesn't believe that they are going to get, at the end of the day, if they're going to get a pen pushing product, then they don't want to even share any information, any data, right? So I think it's a combination of what the banks believe and how much the user trusts them, and based on that, what kind of budget they allocate to this. Theoretically, everything is doable. I mean, they're big, they're billions of dollars. Of course, it's doable. But that's in theory, we've seen it. But,
right.
But if that was the case, then none of the startups would have existed.
Yeah, exactly. I mean, that's what I'm sort of trying to probe, is that what's in their DNA that prevents them from doing it, that allows you to do this. That, the fact is that maybe the DNA doesn't allow them to focus on certain types of customers because they're too low margin for them, effectively.
That's definitely one of the cases.
Yeah.
And the second also is that there's a huge change in mindset required for them to suddenly become a data-driven organization or a tech-driven organization. So there's so I've been on certain panels where there was a debate that what happens if Alibaba or Tencent or Google set up a bank or Amazon, and then you have a technology player who becomes a bank who can think like who's a data-driven or a tech-driven play. And suddenly that's when the banks will be like, oh my God, what's going on here?
Yeah, it was happening already, right? I mean, look at Alibaba and...
Yeah.
Okay. Tell us a little bit about the actual product itself and what it looks like. I think we've got a couple of slides here that maybe I can just flash up. So slide 10 here. You talk about the solution here. Maybe we can talk about this because you talk, the umbrella suite of solutions, the RoboAdvisory. What else in this portfolio do you have as a solution? So there's three. So I'm going to have to describe it for people who are listening, right? You've got three tiers within your solution. Can you describe what those are?
Yeah, so this is the RoboAdvisor is the embedded solution in what we are now calling as the Freedom Account. So this is the starter plan where we're saying that there is no advisory fee, no hidden fee, and nothing. It's just for enabling people to get started.
Right.
But as the amount of investment goes up, that's when we ask them to upgrade to a premier tier where more products, more services are available. So for example, the free tier, the Freedom One is completely digital. So the support is also completely digitally available. Whereas in the Premier, you do get to, let's say, get on calls with advisors and so on. And from the Premier tier, you can also upgrade to the private tier, where you are getting pretty much all the products that a typical private bank would get, but in a digital manner through the app.
Okay, so you're effectively building the potential lifetime journey for a customer from where they may start quite young when they're starting out in their career to, when they get their mortgages, their pensions, life insurance, all the way up to,
that's correct.
Private wealth, which would maybe investing in unstructured products or maybe the riskier products.
So it could be products where they want to take leverage. It could be certain products where which are a little bit more complex or they need more sophistication, let's say. But there's a huge demand for those. So it's not a product that you would recommend to a first-time investor. So as the journey grows, as the net worth grows, their requirement goes. So if there is, let's say, a goal-based investing, so you may have invested enough for goal 1 and 2, and maybe goal 3 is just growing your money, and that could have more sophisticated products in it. Okay. So that's when you're ripe to move into a private wealth tier then.
All right, well, let me ask you this then, Asheesh, is that, I guess, and you've probably heard this before, so, it's an objection that you may have dealt with many times, is that when you talk about retail banking, for example, financial services, everybody's aware it's structured in a similar kind of fashion. You're onboarded, from the early days with your student bank account, where they're giving you the kind of terms that your parents would only ever dream about when they're giving away free money, right? So they know the lifetime value of a customer. Once you're in, you're in. You never leave. But that's changing. But that has been around for many years. And then you've got, let's say, to the next level, once you graduate and you're in the world of work, you move up to that premier status.
Yeah.
And you know how that works, is that you become a premier bank customer and they promise you all these things, but yet when you actually, you get a relationship manager and you have access to this special,
right.
You don't go into like where all the hoi polloi going in the front of the retail bank. You go upstairs in the premier bank department and you maybe have more comfortable seats. At the beginning, people bought into that, but we've wisened up to that. That sort of premier level is actually nothing really, because they've all just graduated up to the next level now.
Correct.
So, how do you must be mindful of that's what's broken in that industry,
right?
How do you then approach it differently? What are you doing differently? Because structurally, it's a similar idea. I mean, they set out with that goal of let's sort of graduate all our customers through their life cycle, their lifetime, right?
Yeah.
But the whole thing falls through in the execution of that, right?
Right. So firstly, we are like the no frills version. So there is no, like business class as in first class kind of, going to that particular lounge. So in the no frills version, the difference here is that when you have graduated from stage 1 to stage 2, so let's say the freedom tier is for you to just experience how the platform is and if it works for you, and then the premier is where you get greater access to a segment of products which we believe that based on your profile you are now ready to get access to. What we don't want is giving you something that you suddenly like, or you like certain features of it without fully understanding what that thing is, and go for it. So there has to be a gradual path, and go for it. Now, of course, with those products there is a little bit more hand-holding required because they may not be as straightforward as buying an ETF off the shelf. So whether it's bonds or whether it's any other baskets of thematic baskets. And then again, similar gradation happens from premier to private. So the idea is that you deliver more and more access, but you deliver at the right time. If you tell a student that, hey, you can access shares in Grab before its IPO, that be like, oh shit, I don't get that anyway.
Yeah.
I don't have the money to do it. It's just going to lead to more frustration.
Okay, gotcha. All right. So tell us a little bit about where you are in the journey. And you're live. What kind of user numbers do you have? Tell us a little bit about where you need to get to next. What the next milestone is that you're working towards.
Yes, we are live. So we started as a tech company, developed the whole app, the whole platform for about a year, and then we took licenses in Singapore, Hong Kong, and India, with Singapore being the place where we started off. And now we have upwards of 400 odd clients. With an average account size somewhere between $80,000 to $100,000. So we are managing close to somewhere between $35 to $40 million today.
Where would those guys have gone normally? Where would they have taken their money?
So these are people who are effectively not being given access of any private wealth account. And they are just, I would say, sampling us out, testing us out with technically smaller sums, a smaller wallet share, which can grow 10 times. Because we know, we see that, when they do their profiling, they tell us about themselves. We see someone with $1 million will just test it out with 50,000, 100,000, and then grow with us over time. So these people are typically people who would bank with any private bank, but they do want services, or they do want features such as leverage or access to new issuances, etc. So that's what they go for. Yeah.
And do you charge fees then for the bank account?
Yeah, so we do. So like I said, for the premier private, it's a fee-paid solution. So it's not like just giving a freebie and going on.
Right.
The fee range somewhere between 0.3 to 0.5%. And in certain cases, it's also performance-driven.
And what are your plans for onboarding new and acquiring new customers from here? Because I imagine you probably, within your personal network, a few people that you've already pulled them on board to try it and MVP it at the early stages.
Correct.
What happens next when you want to, there is word of mouth, but that's quite organic, isn't it?
Correct.
Have you got a more sort of inorganic approach to onboarding customers?
Yeah, so now the digital marketing has been playing a major role. So we had a whole new marketing team, which we expanded. So we had just 2 people, which we now expanded to 5. So they've joined in the month of Feb, and using those digital efforts is where we are growing. So we do have a sales team also, and that's who helped us, let's say, in the first couple of years. And still it's very much needed to grow. But I think the digital acquisition of clients, partnerships, that's what is likely to take us to the next level.
What's working there? Where are you finding your digital marketing getting results?
So I think it's coming from a very, I would say, content-driven play. So the fact that we know what we are talking about, we're not like first-time investors. We do understand what happens in the market, especially in a market which is driven by Trump's tweets. So it's quite a tricky one. So it takes a good amount of experience to see how to maneuver these so-called treacherous markets. And something or the other happens every year, I can tell you. Which,
that's
is totally non-intuitive.
Yeah. Are you finding platform-wise what works for you? Facebook? Are you doing Google ads? Or?
So on that front, we are still in the discovery phase. LinkedIn has worked well for us. But between whether it's Facebook ads or Google, it's still, let's say, early stages, where I would say we're a couple of months away from finding the right channel for us.
Yeah, it's a long discovery process, isn't it? But it's a model, effectively, if you know that it costs you $50 to acquire a customer, but your average customer over a lifetime could be worth, let's say, $2,000, just for argument's sake, in fees. Then it's just like, do more of that model, isn't it? That's what we need to do. So the question then is about how big is that particular market? How many customers are out there? You have licensing in Singapore, Hong Kong, and India. So do you know the complete, you've given a value on it, but how many people are you effectively targeting?
So I would say if you look at the market between these 3 countries, the number of clients who would qualify for that middle segment is upwards of 20 million. Of course, a large chunk being in India. And in terms of the assets under management, there's like almost I think about $2 trillion between just Singapore and Hong Kong that comes under these segments. So the market is huge when it comes to wealth, and it grows over time.
Especially here in Asia, the middle class, right?
Exactly. So it's not only the number of people who are becoming more affluent, the wealth also is growing over time, because money does earn money, unless you're really bad at it, which we are not. So it's a very growing segment, and has place for a number of players to be there and do well. But the key is that when you're trying to do a digital acquisition, you need to build that trust. And that trust comes through the right kind of content, the right kind of service, the right kind of, let's say, educational stuff that you put out there. And you need to give that impression that you know what you do. We don't believe in, like having a branding which is made super exclusive and things like that, hey, you come here, you get access to a Bentley or something. No. So it's basically, we know what we're doing, and there is some kind of educational element to it, where we can be there with you throughout the journey. Because the wealth advisor that we have built is there with you in your pocket 24/7. At the click of 2 buttons.
Excellent. I'm curious to know the people behind this. So obviously yourself, Asheesh, but there are more. And obviously you are recruiting as well. Like you said, the digital marketing guys are quite new. Bear in mind, this is March 2019, so it's all subject to change.
Yeah.
Let's have a look at the team slide, which is on 16 in your deck here. You've got the organizational structure and then also the team. So there's a lot in here. Maybe we can start just by talking about you and your co-founder. Where did you you mentioned him earlier, that he worked of that world, and then you pitched him the idea? Or
so Vineet, he was, so both of us were together at IIT Delhi Computer Science in the year 1996. So then after 2000, I went my way into the world of finance. MBA and then finance, whereas he went after an MBA into the world of tech. So 2016, which is exactly, let's say, 20 years later, or let's say 16 to 20 years later, we got together to start this. And then so he comes from, a very product and tech background. He understands how mobile apps are made and run. And I bring the whole financial element to it. And let's say the access to capital. So we divide our roles, into certain key things, and then we have a a very solid team that we have, both in terms of financial acumen, technology, as well as sales experience. And so we are there in 3 countries as a licensed business. We have a rep office in Dubai also. So we have different people responsible for businesses in each country. So there's, let's say, Chi in Hong Kong, and Ashwin is in Hong Kong, and Arun and Kimi are here in Singapore. Then we have the core technology being built by, our head of quant. He's right now in London, but he's moving back to India. And then I have another batchmate of ours who is a PhD in machine learning, currently in Seattle. So who's helping us build all the algorithms. Yeah.
So how many people are you in total? I know it's a difficult question sometimes because we
so
lose count.
The total company as such is about 40 odd.
40.
Yeah.
Okay.
But a large chunk of them are based in Bangalore because that's where the tech is based.
Right. That's your development hub. So most are based in Bangalore. Here in Singapore, how many?
So Singapore, we are about 6, but going to 12 within like 4 months.
Okay.
Yeah.
Right. And it's a Singapore registered company, right?
Yes. Okay. The head office is Singapore, the holding company. Yeah.
The holding company. So you're here. And your CTO, your partner, is based here as well? Or is
so he's based in Bangalore.
He's in Bangalore.
He travels here very frequently. Someday he'll probably move here, but for now he's there.
It's just about doable at this stage, isn't it? And you've raised as well. So you've got it on your pitch deck here. You've raised just under $5 million US dollars.
That's correct.
Yeah. And without sort of disclosing everything, the kind of investors that came on board at that stage?
So the very first round we did was a small, close to I think 1.2 million, which was from angel investors. So that was from people who, let's say in 1 degree or 2 degrees of knowing each other. And they were all people who were working in banks, technology companies, hedge funds, and so on. So they supported me when I was just starting out. And then we had IDG Ventures, which is now renamed as Chirete Ventures. So they participated in the second and third round. So taking the total size to close to 4.9 million. So getting an institutional venture capital on board is always useful. They bring a lot of insight and the comfort that you can get access to more capital later on.
Okay, and you will be raising again in the future, as always, for every entrepreneur. Right. So it never stops. Rough timelines on that without holding you to anything.
So we should be raising anywhere in the next, let's say, 3 to 6 months.
Yeah.
And we're likely to raise a Series A, which could be anywhere between $5 to $10 million.
Okay. So for those listening, that would be roughly August, July.
I would say
August, September. Sorry.
Yeah, something like, let's say, between Q3, July, let's say.
Okay, so Q3. Yeah. Excellent. All right. And you also mentioned it that you are expanding. So let's put it out there because people do watch this and they're looking for teams to work for, people who are working on great projects as well.
Yeah.
What are you interested in hearing from? Hard skills or people with particular mindsets, people from particular industries? Anything at the top of your list?
So I believe in people. The whole company has been built by handpicked people by me and Vineet. So if I find someone who's passionate, because passion you just cannot replicate. Skills can be built over time.
Right.
But of course, having some background in what you've done, experience, that helps. So we are looking for people who can, do advisory, sales, a bit of tech, marketing, pretty much across the board, compliance, so across the board. So, but the idea is to get people who can take this business to the next level because we are anticipating a surge in growth in the next 9 months. Simply because we have set up the pipes in place and we can smell that initial success. And then see that, okay, this thing is likely to be something that could go out of our control if we don't have people at the right time. And hence, basically, just doubling the number of people here in Singapore. In fact, even in Hong Kong, we're going from like 5 to like 8. And India's like perennially expanding too.
And what sort of backgrounds? Do they have to come from the world of banking or retail banking? Or
no, I believe in fact, we were wondering we should go to the SMU and NUS and NTU and get people like who are energetic fresh grads from there, or anyone who has a bit of experience on, let's say, regulations, compliance, and things like that. So the hiring doesn't have to be from in the same industry you worked somewhere. I'm not a big believer of that. So it's something where you need to understand the pain points because our business model is somewhat different also. So it's a very tech-driven play. So a traditional player sometimes, or people who worked in a bank for 10 years, they may not even be able to identify with the business model itself. And then the culture fit becomes a problem. So we are quite picky on hiring, but still trying to go at a fast pace.
Yeah. The culture fit's important, isn't it? Mindset wise, what are you looking for? Because if the mindset is more important than the experience, then obviously they have to have experience that they can bring to the table, but not domain experience, not, for example, experience in banking. Culturally, what do they need to know about working at Kristal.ai, in the sense that, there must be certain type of people you don't want to apply, maybe because they come with expectations, or this is not the right place for them to work, because passion's great, it's great to have it, and everybody's going to say they're passionate, right? But what are the kind of things that you need to look for in them that you think, this person's really going to fit in and add value here?
So I'll give you a sense, so the kind of signals you look for is do these people understand the value of the business? Do they attach value to the stock options that they're likely to get? Do they think that this business can grow to the next level, where could we become the Robin Hood? Could we grow as fast as Instagram grew? So can it actually grow at a pace which is not thought of? Do they think of us like a bank and put us in a box over there, or do they think of us as a video game app that can go viral? So it's just gauging that whole thought process on and how do they think they can make it happen, and just checking that thinking process, that style of thinking, which shows a lot of openness. You get the right vibes, and go for it. So always in a startup, you have to be cognizant of the fact that you never have a very high cash salary packages, right? So
like compared to your old world, right? Exactly.
Exactly. Especially coming from banking. So the moment you are trying to manage expectations that, hey, I was at X amount of dollars and I should get 1.1, 1.2x, you just lost the plot. So that's definitely that doesn't work. But what works is how you see this business model and where you think are the right catalysts of growth, which can take it to the next level. So I tell my firm, my people, right, that it's simple to become 1,000 times. You just have to double the value of the company every year. So in 10 years, you'll be worth 1,000 times.
Right, there you go. Basic economics, maths. I think, it's great, isn't it? If you have somebody who comes to you wanting to work for the company who, not necessarily of that world, but you want them, and this is, I guess, advice for anybody that's listening now, thinking, I want to speak to Asheesh, is that they've used the app, they've been playing around with it, and they've been thinking about it, and they've been thinking about what it can be, and then come to you and say, I've been working on this, I've been sort of playing around with a few things, a few ideas, I want you to have a look at this, they bring their ideas, and maybe it's a UX thing, maybe it's application of AI, maybe it's an onboarding or workflow,
correct,
whatever it may be, but you want them to come with those ideas, right?
That's
and
correct.
You say, okay, I never thought about that, and it might not be the right thing, but I really dig the way you approach the problem.
Exactly.
You're not waiting for me to say, Mr. Asheesh, tell me what I need to do. It's like, okay, I'm out there looking for a solution for this. And
that's correct.
That's the kind of thing that you want to hear from. That's
Definitely.
the proper startup mindset.
See, what you want is like, when Zuckerberg has this guy who comes to him that, I'm going to put a dislike button in your app.
Yeah.
And they say, oh my God.
Yeah, right. Exactly. I've been working on it. Exactly.
That's what you want.
Exactly. We put it out there. Those are the kind of people we want to hear from. So, Asheesh, thank you so much for sharing your journey with us today. And Kristal.ai, the mission, the story. Best way for people to reach out to you in whatever context. LinkedIn works for you?
Sure, yeah.
Yeah? Okay, so we'll put all the details there in the show notes, with links to the company and so on. And all the best. Good luck with You've got some big plans, some brave plans ahead of you.
That's
obviously, recruiting, which is never easy. I think often finding talent is harder than finding money.
That is very true. Yeah.
Especially here in Singapore, when
that's true. Yeah.
Why should I work for this when I can work for DBS, right? So you've got to get the right people. So all the best with that, and come back and update us as well on the journey. 6-12 months on, see where you are.
Perfect. Yeah.
Would love to hear the part 2 of the story.
Okay, that's great.
So that's Asheesh Chanda, everybody, from Kristal.ai. All the details in the show notes. Thank you so much.
Thank you, guys.